Starting to get into the news of the week now. So not really for sure what's going to happen here. It looks like we built up some pretty good liquidity here. And we just swept these sell side lows right here. We still have some inefficiency below, and obviously the structure area that the dollar could still reach down and grab. Um, so overall, dollars in an area where we could see a little bit of a bounce, but still has some great areas down here that it could continue to fall into. So everything's been pretty much cleaned up to the top side. You got a little inefficiency way up here, but that liquidity area, that pool, it could decide to make its way into it a little bit. Probably more concerned with this one. And then dip back down into this structure. So kind of what I think the dollar's going to do with this news coming up. Today is PPI. Waller speaking. Then we're going to see the FOMC minutes later this afternoon. But the PPI comes out at 8:30, so an hour before market. And then tomorrow is the CPI. Friday is going to be one of those, like, all over the place, depending on how the dollar is impacted by what China throws out Thursday night. And then you got Lagarde and Bailey speaking for the Bank of England and ECB early in the morning. Harker speaking as well, and then consumer sentiment, inflation expectations. So news over the next couple of days. Good area again of liquidity above that, and if you go to the NQ, you can see how we kind of drawn that line with inefficiency below it. So would not surprise me to see us get to a spot where we just kind of dip back down. The weekly looks pretty nice. Kind of comes back into that gap. Nice inefficiency right there. And this structure that's playing all the way over here through these lines. Probably see it tap in one last time before then making a higher move after the news. That's it. The news is solid for the dollar, right? But I have placed this consequent encroachment right here on this 4-hour candle just because big wick looks like a pretty good area for price to kind of consolidate and maybe give us that drop into this liquidity, which would coincide with, the dollar's push. But also, if you go to 8-hour chart, this was a nice little order block that just barely tapped through. We're pulling back down. And then this mean threshold is almost, this consequent encroachment right here is almost the 50% of that 8-hour wick as well. So some good confluence right in there for, a spot that could potentially give us a little breakdown. Nice little straight line right there. So let's drop into a 1. This is that bounce that opened yesterday. Looked pretty bearish at this area right here. I'll go on into a 5-minute chart and just kind of tell you what I was thinking. I had that line drawn right here. It's actually drawn on the micros, but and when this 5-minute chart started just kind of breaking down, and broke down through there, I was already saying that it's looking kind of bearish because we were building up that liquidity. And then it started dipping down, got into that liquidity built up right there. Decided not to go down. We had the structure line there too. And I was, yesterday morning I was talking about up here. I didn't want this move to happen too early. It did. So then we got this huge consolidation area afterwards where it was a lot of indecision, and then it finally broke out. But I was thinking a little bear flag, a little drop through that trend line into that structure, grabbing up all of that, maybe touching into that inefficiency right here, and then turning bullish. Didn't do that. Actually just kind of slammed higher. So good on you, Fred, for being on that side of it and taking that huge trade up. Super nice. So it never gave me a reason to be involved in the market in this area. So I wasn't. I was thinking another breakdown further. That's the reason why I didn't go long. And even if you go into drop down into a 3-minute chart, just not something. There's market open right here, so these inefficiencies right here, I wasn't willing to jump on. But and two, building that liquidity up, I was assuming that it was going to go down, and I couldn't pull the trigger. I liked it. Let me go back right in here. If we could have dumped down and then another nice push up, that was a full on rejection, kind of like a nice big huge bear candle here, and then an engulfing white candle right next to it, and then we continued up. Then that would have been nice for me. I would have wanted that. Having not getting that, and the market just kind of consolidating. I wanted it to break down into here, by the way. That looks okay, but I wanted to break down a little further than that. So I was kind of strict on where I wanted the market to go before I started playing. Sometimes I feel that way and I just don't get involved. Right. Sometimes I'm like, oh yeah, that's exactly it, and I take the trade. But for the most part, we were below the 21. If you add the VWAP, well below the VWAP. So I just didn't feel comfortable taking a trade right there. Oh my gosh. Let me get this dog outside. Hang on a second. All right. Sorry about that. Get the push up here. Nice inefficiency right there. But again, you see where this one closed? Yeah, man. Sometimes I wish. It's funny, they'll bother me at this time once every 2 weeks. I don't know. I don't know if it's something like we feed them or just like the schedule that one's on. So as soon as I pushed record, I heard them get off the couch, and I was like, you can do that to me this morning. But where this candle closed right here. So that was another reason why I didn't want to get involved on that inefficiency there, because we didn't break and close above that. We just kind of broke above that. So I was not convinced with this push, right? We come all the way back down, hang out, another inefficiency there. But again, we're not closing above these wicks. And then market open. Market opens. Looks like we're going to go bullish. We finally do close above those wicks. Next candle comes in. We pop up. I figured I almost missed that move, and then it just started slamming down. And if this is when I thought we were going to continue to go. I think I was already saying this looks pretty bearish, but when that candle came in and was way down here, I was like, yeah, we're dropping down. But then it slams up. It's one of those things, just indecision. This is an area where in the past I would have lost a lot of money. just taking trades, not taking a trade and setting a stop, you know, taking a trade here long, setting my stop below the low and go, I would have been chopped up. And then it finally decides to eventually go, right? But a lot of time having to sit there and wait on that move. And then when it finally does move, it doesn't really give you any kind of good entry on the 3 minute, drop into a 1 minute. So maybe a breakout right there. Got above the low or above the 21. I think if I drop the VWAP, we're probably above it too. Yeah. Maybe a breakout right there. But yeah, yesterday's morning candles were that area right there. I think in the past I've just lost so much money in a chop like that. And I've decided not to. So today, let's see. No, not on the 1 minute chart. Three-minute chart. Oh yeah, up here. Yeah. Yeah, and that's after the breakout. And as you can see, I'm at structure right there. So it would have been one of those things where I'd had to wait through that pullback and then wanted to see that rejection. So my entry would have probably been up in here as opposed to down in here. Maybe around this structure. Having this structure line already on the chart, I don't know if I would have entered on that pullback because I think that's what I pointed out to Fred in the chat. Say 260 right here. We got here and we rejected. I would have thought we've taken out all of the highs from the overnight sessions and everything that were probably coming back down. That would have been a good area to target if you're already in. But yeah. Yeah, you could have, I mean, easily, yeah, could have entered right there and took off. Yeah, and I'm not saying that this was a bad entry by any means. I'm just saying, like, in my experience and in my trading, I'm one of those I'm a momentous trader. All right, I got a dog scratching on the door. Hang on a second. All right. I'm a momentous trader. So when if it doesn't move when I get in right away, the chances of me actually winning on that trade are very, very low. I take trades where I'm trying to get in as the move starts to happen. I don't want to hang on to the trade. Now, obviously, that doesn't happen every time, and I do have to hold through drawdowns. But I'm the type of trader that I want to be in like right there, and I want to catch this move. Right? Doesn't happen every time, but I'm just saying, like, that's the type of trader I am. If I'm in here, I'm stopped out more than likely, right in there. If I'm in, on a lower time frame, probably some other inefficiency or whatever. Let's say I'm in here, I'm stopped out after holding for so long just because I get impatient and I want to overanalyze, and I was already thinking bearish and now it's definitely dropping below that. So cut the trade and then it goes. Like, so many emotional tendencies will come into that play if I'm in something like that. So the fact that this moved that much without me and it hit a structure area where I would have wanted to have taken profits and then it's starting to pull back, I would not have been able to get into that trade long there. Might have on the breakout, but just knowing mine. But again, like Fred was in at a good time, had his stop in a good area. I think you said you had almost gotten stopped out on that wick right there, but had his stop in a good area and stuck to his plan and was able to make that move. And yes, this is a good efficiency right here that wick gets in, and efficiency right here that, this rejection of that candle is perfect to enter. So all of that, good trading. Me personally, and of course, this is me. Like, I'm not professional. So me personally, I would have ended up losing probably on both, on a trade down here. And if I had entered, somewhere right in there, I would have been worried, stressed. I know I would have never pulled that trigger right there. Let's see, NQ steady bullish gave me a shred of confidence. Yeah. Yeah. It kept making highs. Um, where'd we go? Yeah, sorry guys, I didn't mean to do that. But yeah, we kept pushing higher through that area on a higher time frame for sure. Yeah. So, and that's the reason why, I'm like, yeah, I was a good trade. So, I mean, even if you had taken a loss there, Fred, and let's say it does break bearish, your entry criteria and everything would have still not have amounted to like a bad trade or anything. Like, and we were talking about it getting a good pullback, getting into this liquidity, and that's exactly what it did. It got down into here, into this inefficiency. I mean, into this liquidity, got into that order block right in there. I mean, if you want to call that an order block, but kind of like that engulfing pattern right in there with a wick that made a lower low, pretty close to it. So somewhere right in here before making that turnaround, like all of that, we were talking about. That's what I wanted to do. I just kind of wished it would have done it closer to open. I wish this was like the open drop, like, and I probably would have trusted it a lot more. The fact that we did it so soon and then we just consolidated just made me very, very not confident in where it wanted to go, because the last couple of mornings we've had these type of openings where we've gone up and then slammed all the way back down and then finally made that push, but we made that push later in the morning. Whereas here, we just, I mean, this is open. So, the last couple of mornings we've taken out those highs, come back down, made a new low, and then gone. So I just didn't trust the consolidation here to give me a good insight on what was about to happen. So, and the overnight made this low high. We've taken them both out. A lot like what it's been doing, where we take out the Asia lows and highs. We've just swept the London highs here. So we still obviously in a bullish pattern. I would love to see this thing break back down and then come up. That way we can trade with this type of a area, right? Come back down, take out the lows here. We've got this structured junk right in there that it could play with, and then maybe a wick down. Something that looks like that. That'd be really nice. And then a good bounce back up into this consequent encroachment. So this would be a great target if we were able to get some type of here, and then a drop down, and then an up. So I think that's kind of what I would like to see today. Right. Yeah, large targets, large risks for sure. I think in the last 2 days, yesterday's Casper trade, the day before yesterday's Casper trade would have lost 41, 42 points. And then yesterday, 167? Or did I get those numbers backwards? 47, 61. I don't know. Anyways, you're up 12, 15 points right now in the week. So if you were to hang on to that, you're up, quite a bit. So, that's what I would definitely pay attention to, be picky with it, and know that there's news, and take those profits. So, especially if momentum's lost, like yesterday, momentum was never lost, right? Even with the Casper trade, momentum was never lost. So, drop into the 5 minute. Here. I don't even know where it's at. Was it right in here? Yeah. So the 10-minute candle created that little bitty fair value gap. Is that what it was? But yeah, and so, and that's the same area that Kyle was pointing out on the 3 minute, the 10:09. Yeah, that little touch in right there, and then go. But again, one bearish candle in this entire move right here. So there's momentum really wasn't lost. Whereas day before, that momentum got torched. Right, we start coming down. These bull candle. This closed bullish, bullish. Like the momentum was lost on that down move. We didn't make that lower low, whereas yesterday we made the higher high. So, right, right, and I think that when again, going back to, it's great to have a plan, it's great to stick to it, but at the same time, we got to read the market. And if we read where, okay, we're at, this is the only part where momentum actually kind of took a break, but we're in at the end of that, right? And then you go. So that's your entire move right there. So, um, yeah, because your 2 to 1 was, yeah, no resistance whatsoever in that entire move. So that's like the ideal, like barely any drawdown and just slams higher. Like that's like the perfect setup for that. Yeah. I know what, and I told y'all in the beginning of it too. Once you see it, you can't unsee it. Like once it's there, like you have to be able to kind of use that knowledge when it's when you should use that knowledge. You know what I mean? Because I mean, this is simple support and resistance as well, right? So there are people who will create zones on these wicks and pull it across, and that this will be a zone. Price slams through that zone. They're already thinking this is like a Don Fron. Oh man, Forex for Noobs is another guy who will trade this way with zones, and they'll trade to these zones, right? So he may have a zone down here where this is a zone. And as soon as it starts breaking up out of it, he'll go ahead and take the long, and he'll trade from zone to zone. But if it breaks through that zone, it's still bullish. He may have already gotten out of that trade, but he's looking to go long after it breaks through this zone. So on the pullback, he's entering right in there. He's not using ICT concepts. They're not using any kind of structure as far as like this line right here, nothing like that. He's got a zone that he's paying attention to, pulls back to that zone, he enters and goes. And then he's got another zone drawn. And their charts will look a lot like this and another one up here. And this is where they'll trade to. They'll take trades from this zone to this zone, in and out. This zone to this zone, in and out. And they may leave a runner, right? If it goes to that zone pretty bullishly, they may leave something on. If it comes back, they may re-enter and go. I know Don Fron will do that. But most of the time, especially in the Forex guys or whatever, they'll trade here, all in, all out. That's it, liquidity. And that's the thing that, I don't want to like say all of it all the time, because I don't want to get anybody confused and, too many words and terms and whatever, but like, you just got to stick to one thing, right? So the zone thing doesn't really work for me, because to me, it's too big of a gray area. But I do like the structure lines, because it's a little more precise and it gives me an exact target or exact place for price to consolidate. This was almost not enough consolidation for me, even on a lower time frame. So I don't know if I would have re-entered there. But if I had another structure line up in here and price got up to it, this right here would have been good consolidation. I'd wanted to see it to break down a little bit more into that liquidity pool before going. But, things like that, like, it's just an incorporation of everything that you've learned over time. Like, if you got people who are just going to jump in and like be successful right away, it's because they latched onto a certain plan and they are just sticking to it. And during that time, that plan worked out solidly. They're going to go through a rough patch where the plan's not working, and then they have to start learning how to read things and learning where structure and liquidity and all this kind of other stuff is, in their own terms, in their own way. Like, so ICT made it to where it was understanding. I could understand it through his through his way of teaching it to me. Like, I always knew structure and support and resistance where I started at. I started drawing lines on the charts. But I mean, I think I was fortunate enough to be able to start there. But then I moved into candlesticks. Jeremy was a big candlestick, and not necessarily a pattern guy, but a candlestick guy. So I started learning about the different candlesticks and how they react and whatever. And then tier trading or tier one trading, those guys are big pattern guys. Well, they're kind of they have a plethora of things. They have a huge toolbox. But through some of the talk with, or some of the podcasts or whatever that they ran, can't think of his name. Akil Stokes is one of the guys' names. The other one is Greystone. They were pattern traders, so they would chart out patterns on a chart. And to me, it went from my support and resistance lines, and then utilize certain candlesticks for their reversals within these patterns. So I started seeing patterns and learned patterns. So all of that started going into my learning. It was like a scaffolded type of learning experience for me. And now, having all of that, sometimes it works against me and overanalyzes. I see it all at the same time when I should only be seeing one. And then, but sometimes, it'll keep me safe, and I'll be like, oh, I recognize that and don't want to do that, so a nice push here. Let's see, Pat, too many different, exactly. That's right. And there's not one holy grail, right? There's just where I've gotten to now is, obviously I use ICT concepts and time-based trading, and all that was, I don't know if it was introduced by ICT, but it was definitely made mainstream by him, right? It became very popular through him. Like, holy crap, it's algorithmic. And because of that, it changed the way I look at the market. But if some of my best trades go back to the basics of, a moving average crossover or support and resistance, bouncing off that structure, and then seeing what it does afterwards is how I get in, right? So little things like that is what I'm talking about. Like, you're not going to find one. You're going to find some successful systems, clearly. The Casper one is awesome. And basically he just took a ICT principal concept and packaged it into an easy to use system. Don't trade. You can only trade within this hour. You're only looking for this, and you're shooting for this, and that's it. And over time, right now in this market, it's a profitable way to trade, clearly. And if you can stick to things like that and be disciplined enough to do that, then yeah, you're going to be successful in basically whatever you use in this business, I guess. So it looks like we're kind of doing the same thing we were doing yesterday, right? Let's go out to a 15-minute chart. Taking out the highs and the lows, taking out the high of London, leaving the low today. I think I'm not going to say it can't be used on ES, Kyle. I think it's better on NQ because of the moves it makes, right? So the NQ will move 20, 30, 50 points when the ES sometimes moves 7, 10. And I think it's just a difference in not necessarily the amount of money but the swing volume. I think you're gonna receive a 2-to-1 more often than not on the NQ than you're going to on the ES. So, especially at that time of day, outside of news, type of stuff. But it's not that you can't use it, because I mean, clearly you go to the ES yesterday at 5-minute chart, looks the same, right? Where's the 10 o'clock? 10 o'clock's right there. It doesn't come back and actually get you in, but obviously if you were to get in here, let's say this is your entry, and remember, this is the fair value gap, so your stop's going to be way down here. So you're looking at a 9.5 point stop. And then, so you're going to need an 18 or 20 point profit target. 19 point profit target. There you go. There's your 2-to-1. But a 10-point stop on the ES, that's quite a bit. Of course, you don't get entered into this trade because this doesn't come down and actually get into the fair value gap. If you did, you wouldn't have been in that big of a drawdown, and you wouldn't have easily gotten it, but you would have been able to have gotten. I mean, that's pretty easy, to be honest. But how many times are you going to receive a move like that? I mean, on the ES, that goes straight away, right? I mean, last 2 days you had this in the afternoon, but more times than not, your your risk reward on the ES is not going to be the same as your risk reward on the NQ. And I think that's the only reason why he uses the NQ over the ES, because it moves a little bit quicker and the risk reward is easier to obtain, that 2-to-1 on the NQ. But no, I'm not saying you can't at all. Like, stick to it. Over time, it will. I mean, these markets move similarly, right? I think yesterday during this time, the ES was a little bit tighter of a move. The NQ clearly had a bigger drop down, but look at what the Dow did. It was like rarely. I mean, it slammed down. This was that drag that was happening, and then when markets opened, you had this huge push down, and then this huge move up on the Dow. It did something completely. This doesn't even look like the Dow or the ES. So it's the reason why it's good to pick one or the other, because the swings are not going to necessarily be the same. And I think that's the reason why you see the NQ being, well, for one, ICT started using the NQ first. Casper was an ICT student in the beginning, and then ICT moved to the ES, and traded with the ES for quite a while. And when a lot of other people started jumping on board, and now he's kind of back to the NQ. Like, he trades both of them, but for the most part, he's kind of back to the NQ. And I think that's the reason why Casper set up the that system on the NQ, because I think the risk reward is a little bit better, consistently better. But no, man, look, Jeremy Newsom, I always say it, one of the greatest quotes in trading. Everything works, just not all the time. I mean, if Fred hadn't taken profits 2 days ago on Monday, you would still be down because you took profits early yesterday, right? If you had held till Casper stop on Monday and then took the trade off early yesterday, because you're already in the negative, so emotions would have played differently yesterday, and you would have possibly, you would still be down. So if not, you would only be up 10, 14 points. Instead, it's a 95 point difference because of the way you traded it. So it's one of those things, like, everything works, just not all the time. And that's where, when it doesn't work all the time, it's where you've got to start utilizing risk management and discipline, and, just being able to try and, it's not about making money. It's about not losing money. And I think that's another important thing to learn. If you can minimize the amount of times you lose money, then it doesn't matter how much you're making, sort of, because you're going to continue to lose less because you're losing less times than you're going to be winning. So, and once you learn how to manage that risk, then you can do what Casper's doing right here, where you can win 31 times and lose 39 times and make over a $3,000 profit in a month's time. So, but and that's the reason why I try and preach, like, everything y'all are doing every day, y'all are taking trades, like, y'all are doing a wonderful job. Like, you're not doing anything wrong. And because you have chosen something that works for you, that you see every single day, and that you can pull the trigger on confidently, keep doing it. There's no reason to change it. Another good quote that I know, I think it's from Jeremy too, is one of those things where, when trading becomes boring, that's when you're doing it right. When it becomes so systematic that it's not necessarily easy, it's just boring. Like, oh, here we go again. That's when you're doing it right. So those are like my two favorite Jeremy Newsom quotes that I've taken from him over the last years. Everything works, just not all the time. And when trading becomes boring, that's when you're doing it right. Right. I haven't quite gotten to the boring stage. I still get excited, but I do understand the talk and yes, sir. We'll take it, man. I'm sorry about that, Kyle. Um, I do understand it though. Like, when it's so systematic, when you get there and you know that these hours you're going to be trading and bang bang, and you're looking for this move, and when it's not there, whatever, it's, that I do understand what he's talking about. Lower low there. Did we make a lower low there on the NQ? No, we did not. So a little divergence there between the ES and the NQ right here, from this point to this point. ES, lower low. and then higher low on the ES. Yeah. So the NQ dipped down lower. So more divergence right in here on the 5-minute chart. So NQ went lower, and then the ES went higher in the same spot. So something to think about there. I like this structure. Let's go out to the 4-hour chart. We got a similar wick. We got structure up here. A lot more inefficiency right in here for the ES as opposed to the NQ. Divergence down here. I'm going to take that line. No, I'm leaving it on there right now. This line's coming from somewhere else on a higher time frame. Okay. Let me draw this consequent encroachment, because that'll be similar to what's on the NQ, and it sets up basically the same way. Close enough. All right. This is one of those areas that if we decide to blow through it, then I would expect a continuation into that structure or higher. If we get here and we consolidate and we don't really have a good aggressive move out of there, then I would expect us to come back down on the ES. So this area is going to be one of those areas to watch for over time. This morning, of course, we got news. Drop into an hourly. Good consolidation down in here. Still got some inefficiency below it. Starting to get some push out of it to get up into here. So if you'll see here, nice little hourly fair value gap there. Drop into a 15-minute. Look at the Asia highs and lows. London highs. So still London low open, which is the same on the NQ as well. And that fair value gap hasn't been touched even on the 15-minute chart, right? So from here to here. So, and pretty good liquidity pushed up. So again, it's one of those things where I would expect, because of this straight line, I would expect price to push into some type of area in here, somewhere in this inefficiency. I do not know where it's going to go or stop. It could come all the way up here. It could bust out of it, whatever. I would expect, though, that once we get into here, somewhere in there, that we're going to make a pullback into this liquidity pool. Midnight open, daily open, and then you have the London low here. So once we start making that move down, these can be your targets. If we start breaking down, I would love for the market to kind of go short today, right? I just think we have more things that we can target down below. It makes it easier. Market's not easy, so I probably won't do that for us. Or if we happen to get here and we do break down, we consolidate again before coming back up, then I mean, we still have this target and we have buy side up here too. So we're just kind of in that middle of that little range to where it can do a number of different things. My anticipation would be, this is a lot like yesterday morning, right? My anticipation would be this liquidity gets dipped into some, I don't know how far or whatever, but it's gonna pick up some of that liquidity before pushing higher. So if we come up and then start to drop, then I would be looking to go short. If, like yesterday, we drop early into these areas, then I would look for a good consolidative move to turn back around and go back to the top side, So, but be careful because we do have news at 8:30. All that being said, news at 8:30. Judas swing bearish, but absolutely, yesterday we got that's what I wanted to see yesterday was that kind of like market open, Judas swing down, takes out the lows, and then pops for the long. And it didn't give us that. All right, it came early, exactly. So today, love to see. I mean, I even wouldn't mind to see us kind of straighten out a little bit, and then a little bit of a pop up, and then a drop. That would be good trading because good structure line there, midnight open, daily open, London lows, inefficiency all down here for a reason to pull, for the market to continue to drop. Like, love that. And I would think the same thing for the NQ as well, right? Straight line, pretty close up here. I would love to see a consolidation, push up, and then that drop. Grabbing up that liquidity structure line, the target below the London lows here. So, yeah. That would be, I guess, where I'm leaning. But, things could change. But I think there you go. Bear silver bullet. Yeah. Hopefully. Right. If it holds out, even if we get up into here, give us some consolidation, give us a reason and a structure break to kind of go down. Right. If it gets up into there, like, I would like to have a good read today. Yesterday, I didn't have a good read in the morning. And I just kind of felt like I missed everything. So I walked away from it and didn't trade yesterday. So that's the reason why I would like to have a good read today. And again, that's where I've kind of gotten in my trading where I don't have to, right? It didn't set up the way I wanted to set up. So I just walk away from it. Day before yesterday on Monday, I had the setup I wanted, didn't work out right away, changed gears, saw it happening. The Casper setup worked good, confidently jumped in with you. So, I mean, it's one of those things like, you have to be willing to, be a little bit flexible, right? At times. But are you with that, Kyle? Let's see. We're going to get this push. Just a nice move. Pretty close. Probably stretching there. Would like to have seen it pull back down a little bit further before it bounced out, but I think that's it. I think I'm going to call it right there if y'all cool with it. Appreciate it. Yeah, y'all be safe out there. Be profitable. I will see y'all in the morning and do it all again.